Good morning. So yesterday I made a video. I was at 1 a.m. and just wanted to clear something from the video. Everything is correct except the cash flow statement, because cash flow statement is cumulative. So the takeaway from that is revenues increased, margins increased, expenses increased. EBITDA was pretty much break even, but the cash flow from operations was not 10.7 million positive. It was negative 8.9. So that's just the clarification. And now I'm sitting down with Gary. We're gonna go over some of these, not into detail, but we're gonna get explanations of what's going on. So Gary, thank you for joining me.
Thank you for having me.
Yeah, so the bottom line for me, just focusing on the fourth quarter, was that your revenues increased a bit, your margins went to about 42%, and your loss from operations went a little bit more because your technology and operations doubled, and then SG&A increased. So let's talk about, like, why did the technology and operations increase? Let's talk about this first.
Well, I think that you have to just take a look at each individual business, right? You know, from a title standpoint, what we're working in right now, and this is an ongoing thing, because everything you build, you don't build something in 2 days. I mean, sometimes to build a technology, you have to set out a blueprint. You have to understand where you think the business is going, and as a result of that, then you have to develop product that you know is going to have application. Sometimes it's 18, 24 months down the road. So if you take a look at our title business, we're spending a lot of time right now and money building what we call digitized loan officer. So instead of everything being done manually as you speak, we're starting off with what they call a starter pack. And most title companies pay $130, and it gives you all kinds of, credit information, about the applicant. It gives you physical information about the building. There's all kinds of other tests. There's MERS reports. There's even terrorism, reports. There's a full array of information that has to be gathered. And some of it is from data and information that we have on our platform, and some of it is social. So it's kind of a quasi chat GPT / data / an assembly of a whole bunch of information. Most title companies pay $130 to be able to assemble. That's what we call that starter pack. We're at a point right now that we're probably about 30 days away, but this is something that's been taking a long time to build. We think that we'll be able to offer that around $60. So massive savings for the title companies. One company that we're talking to, and we're not going to sign the contracts until you go through that, we'll call it the pilot project, whatever. But this particular company does over 25,000 transactions a month. All right, and think about it, savings of $70 per transaction. So it's bottom line massive savings, but it's not even the cost of the savings. All right, it's the timeliness, it's the accuracy, it's the efficiency and proficiency of it. So that's a title, platform that we're dealing with. We got AOL. It's a continual evolution. It's not a revolution. It's an evolution as far as how we roll it out. AOL is going to have massive, upsides in the origination mark, in new loans. And I'll talk about that in a bit, but refinancing the costs, of title and that on a refi is not significant, so it's not the same benefit. But on originations, massive savings. But again, we have to deal with, how do we roll that out? The data that has to be accumulated, because it's still, an insurance product, so you still have to do a lot of the same information. The difference is the cost. The cost of the actual policy itself. What we offer is everything that that they currently have now in the title insurance, and actually better. But you still have to do the work, and we have to integrate it. So there's costs in developing that. When I take a look at our valuation product, Fannie made a statement, I guess about 6 months ago, that it's all about making home ownership more affordable for the homeowner. So what do? They looked at the process as a whole, and they said, 70% of these properties, that we're providing loans to, we kind of already know the value. We don't need to go through the motions of having an appraiser spending, 20 days and $1,000 to do this. If we can gather the information, we've got a proper, sketch, a proper floor plan layout, and integrated with, automated valuation, that's going to work. So what have we been doing? We've been building a data collection tool. We've been building a walkthrough tool so that we can, as part of that data collection, we've been trying to, incorporate what we call Apex for Dummies. So our Apex sketch that we have that's ANSI certified, #1 sketch in the country, represents, over 2/3 of in all counties in the United States. But you don't just pick up the automated model and learn it in 10 seconds. It's a process of the whole training. But with what Fannie is rolling out, we need it to be more simplified. So again, what are we doing? We're trying to modify it, keep the ANSI certification, build in a floor plan layout so that everything can be done on site. Currently, there's really one material company out there that's rolling it out, but they have to basically take multiple photos of the interior, stitch them together. So it's sent out to China or some other country to process things. So, a day, 2 days later, you're getting it back. We're building a platform as we speak that it is on the spot, that, we're getting people to do it. It has to be we were going to, kind of do a lot of the stuff ourselves, but it has to be independent. You have to make sure there's no bias. If who's ever taking the pictures, whoever's doing the floor plan has to be independent. So we've got, a group, a lot of them are agents and that are going to be doing this, but we're trying to perfect it. For example, on the sketching and the floor plan layout, Apple products have LiDAR, which allows you to, basically you've got that, meets and bounds, latitude, longitude, all of the stuff with LiDAR, where other Androids don't have it. And so it becomes problematic. So what we're trying to do is build that, one product catches all. So we've got, the data collection, through our walkthrough platform, the sketch, which is ANSI certified, which is really, really important, means that there's certainty that what you have is what you got. And then floor plan layouts, where you're going in and you're, using the video and following it and be able to identify, the rooms and the sizes. And that, when you integrate it with, an AVM, which is basically mass valuation, you're going to be able to deliver something that costs $1,000 for now something for a couple $100. And it's going to be delivered, kind of the same day. And so massive change. Who do you think is developing that technology? Who has to pay for it? We do. So what you do is pay today, to be able to be paid later. On our property tax business, everyone knows we continually upgrade our RPTA platform. We know that there's going to be an announcement coming. I can't really elaborate on that, but literally for the last, 3 to 5 years, although we're generating revenue from it, we believe that the coup de grace will be coming, within the next, 30 days. And so we're going to be very much involved in any settlement rollouts and platforms through audit, through valuation, and whatever. But it continually, you have to continue to invest in that. And then Al Qureshi, who is Blue Water, amazing platform, right? But you can't stop. So what do we have to do? So he's got the only fully digitized, platform that can take and trade loans, whether they're whole loans or scratch and dent or mortgage servicing rights. So what do you have to do? You have to, when you're trading that whole platform, what most people do today is, because it's so expensive and it has to be done manually, they take only a 5% sampling, and it costs them like $600 to take that. And then the people that are acquiring these rights are going like this and hoping and praying that, the other 95% is a microcosm of the 5% that they have. But look at the exposure that people are buying these MSRs now. You're getting a couple of things. You're getting buybacks. What does that mean? It means that the loan that Fannie has now bought and they've reviewed, they're finding out is full of flaws. And so they can just go back to the original, seller, take the loan back. So it's not, take the servicing, take the loan back. Yeah, right. And so, where does someone come up if the average loan is $300,000? Where does someone come up with that? And what happens if it represents, 1 or 2% of everything you bought? I mean, you're not looking at that kind of margins that could put people under. So what have we done? We built a fully digitized, what we call super transfer, where we're actually being able to monitor all aspects of the loan, all aspects, of the data, within not just the mortgage documents itself, but the data that is used in the calculation of the room, the tax certificates, flood certificates, the values, the title. We digitize the whole process, and instead of costing $500 or $600, we can do a fully review of every property for $25, insured. And by us doing that, we're identifying all of the anomalies that are taking place. So virtually, there are no buybacks. And if they are, it's insured, because, Lloyd's of London have approved our fully digitized process. So, we're just rolling that out because it takes time, because you're finding that all of a sudden you've got limitations on how much insurance. It's now we have to take each portfolio on their own and making sure they're insured, and just rolling it out. And as banks, as go like a sloth, and they move slow. So what Al is doing is, kind of processing that. But, we've just decided to go one step further, and we said, what? There's a whole other business out there, basically called excess trades. And basically what it means is that there's people out there that, let's say I got $150 million and I want to buy a portfolio, but I'm the one that wants to retain it. I'm the one that wants to hold on to it. I don't want to give my 150 to someone else and say, go buy. I'm not letting go. So, what we're in the process of doing is working with an unidentified company at this stage, where we made applications, to the Securities Commission, so that we will have our own Fannie Freddie ticketed shell that people can, we can deliver products to. People will buy and deposit in our shell and have that control. And so to have a Fannie Freddie ticket is massive. And so think about it. Once that process gets finalized, and it could take a year and a half, but in the meantime, we're going to generate revenues from the deal that we have. But once that gets done, we identify the product, that there's product out there for selling. We've got now buyers, because effectively, even though it's not a fund, it's like we're having a fund, right? Because we identified all of these large, pools of capital that they want to put into loans, and they're going to deposit in our platform. So what do you do when you buy it? You have to go through a process. You have to go through due diligence. So, you do all of these checks and balances, everything. It all comes through Voxtur now. And we make margin on the actual brokerage, or the, on that order management system. We make margin on that trade itself, through this, ticketed platform. So now I call it seed to table. There's nothing that we don't touch. To be able to develop that technology and integrate that technology is massive amounts of money. And it's not like you can go to a client and say, would you like? You have to have knowledge of the business. You have to have confidence that there's a demand. You have to realize that it's going to take sometimes 24 months, 36 months by the time you start to the time it's finished. And that's our business today, is that I've taken, I haven't done anything. We have taken a lot of, you know, what we think are forward-looking transactions and what the industry is going to look like. And we have invested in technology. And everybody in this business, a year ago when interest rates were 2%, life is peachy. I love technology. We're giving you 25 and 30 times, you know, multiple of revenue, sometimes 40 times on EBITDA. Like, and most of the technology companies were making money because they've got massive amounts that they have to invest. Well, interest rates triple. And so as you see, first quarter, second quarter of this year, we're impacted. You know, we got impacted a little bit, you know, in the fourth quarter, but we're evolving as a company. But what I see with what we're doing right now, we are so confident from a cash flow positive, EBITDA positive, you know, emerging, you know, in a more formidable way in the fourth quarter of this year. But we're so positive as far as its growth because there's nothing that we don't touch. From starter kits and title that people don't have, from RPTA and audit capabilities and tax, you know, from our walkthroughs and our sketching, you know, on the basically what we call it A now, but it's kind of replacing the valuation, you know, from Blue Water that not only has this full, you know, capabilities to transact and trade on all aspects of loan and provide what we call super transfers, all of the due diligence, wrapped insurance, right? We know that we basically got seat to table. We've started and we finished, and you know, we are emerging. And the only problem is interest rates tripled, and all of a sudden people saying, well, technologies are not making money now. So how do you get over the line? So what you have to do, and what we've done, and most of it is taking place second quarter, third quarter, which is, you know, kind of my new tenure, is that I'm going to have 80% of my title business, 90% of my costs taken out, and we're outsourcing some things, but we control the whole title, and we're not. So, you know, title business is going to be cutting. Changes on our valuation business, our, you know, property tax, again, we got the new technology, so we're probably going to need more people, believe it or not, because the business is just going to be bountiful. We're going to have over 440 municipalities, new clients, and that business is going to be phenomenal. All the while, how is it being fueled? By our Benutech company that has an accumulation of data and growth. We're going to be partnering with large real estate brokerage companies to help us with our title, to help us with, you know, the whole process of, you know, walkthroughs and data collection and, you know, and essentially sketches of floor plan layouts. They'll be selling title for us or recommending. We'll be partnering with the largest brokerage properties, you know, across the US. So, you know, when I take a look at this, man, oh man, everyone wants, you know, instant gratification. And I think that you're going to see that in my tenure, you're going to see, for example, in title, that where we have been losing $300,000 a month, we're going to actually start making money in title in August. Just a massive 360 turnaround. You're going to see a massive change in our valuation business, focusing in on data collection and walkthrough sketches, floor plans. You see a massive change there. Al Koreshki's business now has seed to table, right? It's not him out there identifying it and using his technology. He can take everything right from the seed and finish it at the table. We can do everything, you know, from identifying to doing due diligence to actually facilitating a trade and putting it, you know, in our ticketed, you know, shell entity. I mean, there's nobody like it in the planet. Absolutely zero. And so, and every time he does that, he brings Voxtur in. So, do I love this company more than I ever have before? Are we betting on the technology? Guess what? We're almost there. like when I say almost, the amount of technology that we have developed, I think that the last material piece of technology costs is creating a fully digitized loan officer. So the start is the title pack that I talked about, where we'll only charge $60. They're currently paying 130. Do you know many hundreds of thousands of loans that are taking place a month? It's just like a massive business. The bankruptcy, massive business. Al-Qureshis, massive business. The data collection, massive. The total addressable market for our company with what we're doing, there is nobody like us on the planet Earth. But at the same time, I'm sitting here humbled because I'm trying to cut, and I will have cut our workforce by over 50%. Probably when I'm done by this fall, probably will only be 40% of where we were. Our corporate costs, if you will go from over $4 million, will be probably dropped by the fourth quarter next year to $750,000, a month. Like our savings, our austerity measures that we implement, all the while trying to continue to maintain our technology growth. Tough job beyond, but all of the fat cats gone. First of all, I've never been paid a bonus since the day I've been here. We have totally terminated the acquisition bonus. No more acquisition bonuses. They've never been paid. No acquisition bonuses are going to be paid. All of that is gone. Like everything that we possibly do. I mean, this past year, I was provided a bonus. It wasn't a bonus. It was a draw against money that was owed me. I have decided to waive all of that. I paid that drawback. I had shares that I previously paid for, but because of the way it was accrued, didn't have it. I was given the shares back, but I can't sell them to pay for tax. So 2 months ago, I had to write a check for $2 million out of my own pocket, $12,000 a month of costs just to carry the interest from that I can't touch. People want to know about commitment to this company. If I take a look at what I've had to pay out versus what I've received, I've actually paid out more money than I've been paid. I'm kind of negative right now as far as the cash flow coming in versus cash flow that I paid out. We're committed to this company. This is going to be probably one of the biggest success stories that you can ever imagine. I absolutely know, where we're going with this. Nobody's touching us. I just read in the last night that there was a transaction that Black Knight just sold to Constellation. I don't know what it's called, Blue Light or something like that. And it's basically a company that's very similar to ours with no technology, very little, like almost no technology. It was the original cost or valuation was 1 point something billion. It just sold for 700 million. I wouldn't, where they've got some business, unless you have technology going forward, you can't survive. And there's nobody that can touch us, nobody on the planet. So we have all kinds of sub-servicers out there right now with what we're doing, going to be, promoting business for us, selling business because we have the technology, we have the insurance, we got the due diligence. So yeah, there's going to be, some businesses that we're looking at that we will sell because they're boots on the ground. Not going to say what they are or who they are, but basically we're taking 7 and 8% margin business and replacing it with 75% margin. Our goal is to mitigate our debt substantively. That will be done through some dispositions, and it'll be done through some raises right now because we want to be debt free by the end of the year. Well, and that will all occur at the same time. Why are we doing all of this? Because we got to get back to the point of where you want us to be, right? You want us to be on a major ticket. You want us to be on TSX. You want us to be on NASDAQ. And that's where we're going to go. So, back to these financials. Hey, revenue increased a bit, but it's a little bit of cyclicality. You're going to have a bump up. You're going to, probably first and second quarters of this year, you're going to have a bump down. But man, oh man, as we start emerging in the third quarter and, and coming to light in the fourth, you're going to see just such a massive turnaround. And so the opportunities to come in now are bountiful. And so why do I write a check for $2 million? Like, why? That's cash. That's after-tax money, right? Why? Because I know where this company is going. And, you know, for us to be able to outperform our competitors, the goodwill thing doesn't mean anything to me. If they were to take all my goodwill and just write it off, you know what I would be? I'd be happy. No more, you know, spending, you know, thousands of dollars with accountants, talking about something that has no, you know, material. You can't touch it, see it, taste it, feel it. It's just a synthetic view of how you want to, you know, get kind of where the sale price is and where it is now. It doesn't mean anything, right? It doesn't. So I'm happy that, you know, that part is getting behind us. Not everyone understands what goodwill is, but for me, it's basically inconsequential. And if you talk to any CFO in the planet, they will say the same thing. I mean, listen, all of that stuff can be written back up again. And guess what that does? Just create more costs for you, for someone to have to write up, you know, in reverse or write it up or whatever you want to do. What I'm saying is that we got to make money. I know that. And we got to reduce our costs. And I know that. And we have to be ahead of the game with all of our technology. And I know that. And all of that, all of the things we've been doing and going forward will come to fruition starting in the fourth quarter of this year. You're only talking months now, right? Months. Like, we didn't anticipate that the rates were going to triple. We didn't anticipate that, you know, that was going to cause a slowdown. Like, you know, Al Broadway's business evaluation. I mean, you know, it's probably going to drop down, you know, I don't know, 10 million a quarter, because, you know, not as many, but we're getting more market share than we've ever had. So that business is just going to just knock it out. Still very profitable business, right? But we're switching. We're moving more to, you know, data collection, floor plan layouts. We're basically weeks away from a Fannie certification in that. Probably only one other company, two other companies had that Freddie certification. We're in rarefied air as we go forward, you know. And so I'm really, really liking where the company is. And because of that, people say, well, why isn't management, you know, putting money in? Well, first of all, we're so busy, so we can't actually go out and buy stocks right now because of what we're doing. You know, the financials being delayed, you know, caused us not to be able to, you know, we're dealing with some acquisitions / disposition, so you can't. So management will invest, no question about it, but waiting for our blackout to be removed. Management company.
Yeah, okay, well, great. Thanks for this explanation. So it makes, going back to my original point, it makes a lot of sense. Just looking at the Q4, why the technology and operations expense increased. You know, you invested it. You invested a lot in what we're seeing today, in the products that are coming out today and will be in the future. Also, Blue Water became part of your company, and it only dealt with MSRs. You increased so much more with Blue Water. It makes total sense. The investment shows up in the financials as an expense. And then just the final thing on that Q4 number is your G&A increased by about 1.3 million. Is it because of the acquisition of companies?
2 acquisitions, right? MTAG / you know, Blue Water. You know, I mean, Blue Water's not cheap, right? It costs us $600,000 a month, you know, to stay open, keep the doors open. These are highly educated, highly sought after computer scientists, right? These are the best of the best. It's not cheap to run that business. They're worth every penny and more. Doing a phenomenal job. Phenomenal. I mean, and so what we're getting is, when we delivered this, you know, and as you know, we made a big announcement because we've fortified, you know, a relationship with the Mortgage Collaborative, you know, and so they've got, you know, thousands of, you know, financial institutions, banks, and, you know, and credit unions, etc. Well, we have a bifurcation process. So let's say that there's 10 banks, and there's a whole package of we'll call it servicing rights or whatever that we can, purchase or sell. Well, banks want customers, right? And so we can buy them customers. But some banks say, well, we only want to operate in the Southwest. We want to operate in the Southeast. We want to operate in central US. We have that whole bifurcation process where we can, put together a syndication, of buyers and deliver the loans that they want in this respective areas. The only way you can do that is through technology. We're the only guys that can do that. So this mortgage is collaborative with insurance, with the tax, with the title. We have the data. We're back to doing relationships with First American again. We're going to help and do some JVs with them and help them improve some of the products that we have or that they have with technology. Phenomenal company. Just like what we're doing. Really are just trying to enhance our exposure in the technology. People don't know us about it in great lengths. It's okay. There's no sense in going out there and screaming in the seats. Let the revenue start coming. Let the profit start coming, and then throw it out there and watch it fly.
All right, Gary. Thank you very much for putting some lights here. Final question: are you relieved that the financials are finally out?
The stress that this job, has given over the last, number of months is crazy. Like, we've had, as through austerity measures, we have people that have filed complaints, people that have, threatened lawsuits, all of that would come out on the other side, clean as a whistle. But man, oh man, the costs, that you have to go through today. The world is different today, right? The costs are phenomenal. Having an accounting firm come to you a few weeks before you're supposed to deliver financials and say, we resign. Well, why? We can't give it to you. Did we do anything? No. And it's even been fortified when you read, the financials that we've been given. There is nothing in our financials that caused any of them any concern whatsoever with respect to irregularities at all, right? And former market said no, and so then we find out after the fact that they've been sanctioned, they've been fined and penalized, they've been, challenged, and even they had proper licensing in place. That cost us millions of dollars. People reflected that we're in trouble, that we have had irregularities, we have done stuff wrong. It's the opposite. If you talk to MNP today, notwithstanding the fact that they actually filed and finished the financials last night at 10:57, 3 minutes before they were legally obligated to file. They're working around the clock. Robin Dyson, who's their CFO and team, just were relentless. They haven't had a day off in months, working morning, noon, and night. People don't understand. Why? Because some accounting firm, from what I read, I'm not making the allegation, from what I read, had massive inconsistencies, irregularities, been fined, been sanctioned, and basically come to us and say, boom, right? So it costs us millions from speculation, in the capital markets. Our stock went nothing but down because of this. Everyone is speculating we've done something wrong. I don't think we've ever been in a better place. I think between now and the end of this coming year, which is not that far, people are not going to recognize who we are. There's so many things that we're doing right now that is so transformational. And so we through the small raises that we've done, we're going to have enough capital to kind of get us through, so that we're really significantly positive cash flow, not just EBITDA positive, but cash flow positive, which will happen this year. Loving it. And allow us to just watch this company soar. We have 0 acquisitions planned right now. We have nothing but austerity measures and basically delivering and executing on the products that we have. There's nothing that we have. I mean, obviously, there's always things come up. If you can, if you buy something for $1, and it's worth, $20, the day that you get it. I mean, that's one thing, and you never ever can, plan for stuff like that. But our goal is focusing what we got, continuing to implement austerity measures, continually to execute on the products, and making money. And so me coming in, I'll probably have our staff down to 200 people by the end of the year. When we were, under the former leadership, we were over 440 people. So, everybody is doing everything. I mean, I don't have an assistant. I don't have, anybody. Everything I have to do, I do on my own. Whether it's setting up, Teams calls or Google calls, managing my own, meetings, meeting with, investors. Like, we are all doing everything we possibly can, working many, many hours a day. All right. And we will, have this company so streamlined and so fit by the end of the year and so profitable that, people will say, like, what the hell happened? It's that overnight success that took, kind of 3 years in the making. That's kind of what we are. And, I've been down this road before, as you know. I mean, I bought Argus. Everyone's saying the same thing. And lo and behold, the little business that I bought for $100 million now is worth probably $3 billion. You just have to have the right foresight, and you got to have the right intuition. And you can't wait to say to your clients, what do you need? Because it's too late, right? You got to be able to do it quicker, more affordable, more efficient than they can. And then they'll buy. And if you can't, you shouldn't be in business.
All right. Let's finish on this. Thank you, Gary.
Okay, thanks a lot. Take care.